All right, everybody. Welcome back to the Crypto 101 podcast. I'm your host, Bryce, and I'm not joined by Pizza Mind today. He's still in Taiwan doing God knows what. No, I'm kidding. He is at a crypto conference reporting, doing some live streams and some vlogging. Check us out on the YouTube channel, Crypto 101 podcast on YouTube. But today I'm joined by an awesome guest from the Forta network, the lead ecosystem, the gentleman who's in charge of the ecosystem, Andrew Beal. Man, welcome to the Crypto 101 podcast. I hope you're ready.
Bryce, thanks for having me. Yep, ready to roll.
Okay, cool, man. As we were catching up before the recording, you were kind of telling me about like how you were getting into the industry, and it's a pretty interesting winding trail. You have a law background. You're an attorney by trade. So can you kind of tell us what it was that attracted you to the wild west of finance and digital media rights?
Sure. So I think unlike a lot of people in this space early on, like I did not have an ideological sort of hook into crypto.
You weren't like a crypto sort of like anarchist or one of these guys who's like, power to the people and decentralization. That wasn't your thing, really.
It was not my thing. No, I didn't even know what decentralized systems were when I got into it. I went to college. I was a music business major in college. I thought I was going to be a producer when I finished, nice. And I ended up going to law school, and then ended up working with startups when I graduated. And I very quickly stumbled on I was in Los Angeles at the time, and I very quickly stumbled onto the small but like really interesting kind of crypto scene that existed in LA in 2013. And I was the only lawyer, corporate lawyer that was paying any attention to what was going on in LA. At least there were a couple other lawyers that were in San Francisco and New York that were doing some stuff, but in LA it was just me, which was great because I was fresh out of school. I didn't have any experience. I was by no means like a seasoned attorney, but I nonetheless like got to work with really cool companies because by virtue
you
of
were
no
willing
one else,
to kind of go where a lot of attorneys weren't willing to go, I guess.
No competition. Yeah, I mean there wasn't a lot of money to be made. Representing crypto companies back then. But that was how I cut my teeth, and I met a lot of people and did that for a couple of years. Great experience. And then transitioned into kind of consulting in 2016 and joined Ernst & Young, and that was the genesis of their blockchain team. So I moved to San Francisco and for 5 years, worked with EY's clients, which were primarily large exchanges and custodians. So like your Coinbases, Binances, Anchorages, Geminis, Krakens, helping them become sort of more sophisticated financial institutions. And then working with like the fintechs and the banks because they were all interested in onboarding crypto as an asset class, either buying and selling or custody services. So that was sort of what I did there. And then early 2021, left EY, joined Open Zeppelin, and we soon after that spun the Forta network out of Open Zeppelin. And launched the Forta network last fall. So we've been live for a little over a year now. And I've been, neck deep in smart contract security and threat detection ever since. So.
Yeah, no, I kind of picture like, just in my mind, I'm going through your website and learning about Forta, and some of our analysts here at Crypto 101 have done a deep dive and are really actually, they were texting me like, dude, this is actually a really exciting one. They've been doing a lot of cool stuff. And I remember Open Zeppelin, I met Open Zeppelin like at ETH San Francisco, like 2019, like years ago. And I remember a lot of people used Open Zeppelin to develop all sorts of different applications. And so It's really cool that like from that vantage point, like touching so many applications basically from Open Zeppelin, pivoting that to now the security platform. But I kind of like picture like, this threat monitoring kind of like out of the movies, just like where you have like this big war room and you have blinking lights and like, oh, there's a hack going on Binance Smart Chain. And then there's Bitcoin getting withdrawn and there's an anomaly over here at one exchange. But like, what is it actually like? It's probably not an accurate like depiction of what actually goes on at threat detection. So what actually is occurring behind the curtains?
No, I like your I like your visual. So I think those types of that type of kind of monitoring, uh, visual that you just sort of drew there, I think is something that does exist in Web 2, actually. Like, large teams like Microsoft and Google and others have, it might not be a single room of people, but it might be a distributed team of people that are actually monitoring threats in real time and, dismissing them as false positives or investigating other ones that seem more legitimate, and then, fixing them or, blocking that, doing whatever they need to do to sort of minimize the impact. We don't really have that happening yet in Web 3. I think primarily because just the security function is still pretty immature. I guess just to give listeners a little bit of background and kind of what the state of Web3 security looks like.
Seems like there's a hack
this is
every
a
other
very,
day.
this is a very developer centric, sort of industry right now. And so I think because of that, a lot of the focus has been on addressing vulnerabilities in the code. And so that's why you see that's why you see protocol teams getting audits before they go live, doing formal verification on their code before they go live, using Open Zeppelin contracts, to try and minimize like the amount of, sort of new code that you're developing. Using templates is better if you can do it. And then bug bounties are obviously very focused on code level vulnerabilities. And that's because these things are built, they're put into the wild, and then, they're supposed to operate fairly autonomously. And there is a community of people around these protocols that, can implement changes and help steward it forward. But, the goal is for it to sort of run without a lot of human involvement. Right. Mm-hmm. And so, for that reason, a lot of the focus is on the code being as good as possible, which is it's a very sort of worthy endeavor. But there's a lot of other aspects of security that have been underinvested in. And one of them is what Forta does, which is real-time monitoring and alerting. You can also call this runtime security. So watching transactions and activity in real time to try and identify high-risk things, suspicious things, actually malicious things, and then trying to prevent them, or at least minimize the damage from them, right? So that's a very common practice in Web 2. In Web 3, up until a year ago, there really wasn't any real-time security monitoring happening. For a couple of reasons. One, they're just a lot of teams don't have full-time security people on staff, right? Like DeFi teams are by nature very lean, because the whole goal is to decentralize these systems. So you don't want a bulky, a bulky team that you have to support, right? And so anyway, for that reason, you just don't see a lot of full-time security people working at DeFi protocols, and that unfortunately, has a negative impact on the level of security sophistication that exists. And there's also just not a lot of great tools to do this either. So anyway, so Forta is sort of one. Forta focuses on this real-time monitoring and alerting pillar of the security stack, and it has a really close relationship with incident response, which is what you do once that red light goes off and you find out about something critical, or there's a threat that's imminent. Then the question becomes, what do you do about it? So that's right. That's the emergency and incident response function, and that's also a very immature function, at least with respect to sort of DeFi projects and NFT projects. It's a very manual thing today. You don't have a lot of automated response mechanisms, and the reactions that teams do have are also pretty surface level. So those are two areas that I think are going to evolve a lot over the next couple of years, and hopefully Forta can play a part in that.
Yeah, I mean, it's clear that you guys are definitely doing your diligence, and you guys definitely have a lot of you've got a lot of traction, I want to say, and you guys are clearly doing a lot of research, because I'm looking at your guys' site, and I love it. You guys show a list of all the hacks, which probably racks up $1 billion now at this point, or something more. Actually, just between the first two hacks is over $1 billion, Ronin Bridge and Poly Network. And then to the next side of it, you have a big breakdown of how Forta could have kind of blocked this attack or alerted to it and minimized damage. And so I don't want to ask you to go through all dozen or 24 of these hacks and how Forta could have performed in every one. But is there an instance of a highlight that you want to share with everybody? From some of these major hacks, the Ronin Bridge, the Poly Network, Badger DAO?
Yeah, sure. Let me provide some more context though into some of these hacks too, just so people kind of understand like where the vulnerabilities are and kind of how Forta relates to that. So first thing, we like to throw out the term like Web3 a lot when we talk about DeFi protocols and bridges, but the reality is like there's a lot of Web2 components to all of these systems, right? Like the Web3 component of a DeFi protocol is the smart contracts, right? And the oracles and the governance and the token. But there are front ends. There are, there's the application sort of aspect of it, right? There are APIs. There's back-end databases. Like all this stuff is just like sort of traditional software, internet, Web2 infrastructure, right? A lot of things rely on Cloudflare and AWS and like a lot of traditional infrastructure. And so those are also things that need to be, those are components of a DeFi protocol or a bridge that need to be secured. Private key management is also like not a unique Web3 thing, right? Private keys existed long before Bitcoin, and securing the private key material was a thing long before Bitcoin. And so that's something that a lot of teams struggle with, is just securing their private keys, right? Like securing your passwords effectively, and having good access controls and permissions and segregation of duties and all these things that are very, just sort of like table stakes when you start talking about Web2 security. And a lot of the hacks that you just mentioned, like the Ronin Bridge, for example, I believe, was actually it wasn't a compromise of like a smart contract, or it was compromising some Web2 component of that system, right? And so there's so much emphasis placed on like getting a smart contract security audit and making sure that your contract code is good and making sure that your oracles are secure and all that stuff. But there's this other population of things that are also like attack vectors that if you don't secure those, you're just as open to an attack, right? As if you were to
like your operational security, I guess.
Sure. I mean, that operational security is sort of one aspect of it. Yep. Anyway, so a lot of the Badger DAO hack, like a lot of these things I believe that was a front end. Like the website was not secure.
Somebody
like
redirected a URL or something.
Yeah. So you could have the most hardened smart contract code in the world. You could have gone through a dozen different audits and formal verification, and still get hacked because you haven't secured these other aspects of your product, right? So I just wanted to point that out because a lot of the hacks are due to Web2 vulnerabilities.
Yeah, and I think that's actually a great time to ask, like, what about for an individual crypto investor or crypto trader who's not deploying smart contracts, who's not managing a smart contract that's holding, millions of dollars, but they're just, trading their balance, 10,000, maybe whatever, $20,000, but that's a lot of money for somebody. What do you tell them? Like, what are the three most important mistakes everybody makes, or however you want to slice it?
So it's a good question. I think for an individual investor, or actually anyone that's interacting with, a DeFi protocol, whether you're, borrowing on Compound or Aave or borrowing against your ETH on Maker, or doing something more yield farming related on some of these other protocols, right? Like I think one of the one just kind of rule of thumb is like always make sure that you are actually connecting your wallet to a legitimate website, to a legitimate application, right? There's a lot of, as you mentioned, right, with BadgerDAO, right? There's a lot of spoofing that happens with URLs. There's a lot of malicious websites that are created that are supposed to look like the original one to throw you off, but it's actually an attacker that set that up. So that's one, right? Just have some general awareness about like the products that you're interacting with and making sure that they're legitimate, and that you're actually at the right website. So that's one. The second is that when you are connecting your wallet and approving tokens to be used, and then signing a transaction through your MetaMask wallet, for example, right? Like pause and make sure that you understand kind of what you're granting to that contract, right? There's a lot of scams that will trick unassuming retail investors into granting approval to use all of the tokens in their wallet, right? No legitimate application is ever going to ask you to do that, right?
They're going to ask you to use the, just Ethereum or just that one ERC20 token.
Yeah, exactly. If you're swapping a token on Uniswap's just going to ask for approval for USDC, right? Or ETH or whatever token you're trying to swap, right? It's not going to ask for approval for all your tokens, all the tokens in your wallet. So if you ever see sort of omnibus or mass kind of approval requests, right? Like that's one red flag right there. And unfortunately that's very common. And more money is lost by individuals to scams than protocols lose to exploits, right? I think it's like three times the amount of money is lost just by your average retail investor every year. Yeah. So
I wonder how much money is lost just by bad trades, just buying high and selling low. No.
Oh man, yeah, I don't know.
Can your system prevent that?
I've definitely contributed a great deal to that number, I'm sure.
Well, speaking of large numbers, $36 billion in total value locked that you are monitoring. Is that correct? I think that's over half of all the DeFi TVL. It's pretty impressive. I mean, that's insane.
Yeah. So, I guess the way that to kind of back into those numbers. So, there are many of the large DeFi protocols, like Maker, like Compound, Lido, Aave, Balancer, et cetera, use Forta for some aspect of like their operational or security monitoring. So that's where those statistics come from. And
guys like Maker, Lido, DYDX. I mean, these are big names. Yep. It's not just some protocols that fell off the turnip truck and are looking to a new sort of fringe sort of security system. This is pretty much adopted by like the biggest protocols.
Yeah, and I don't think it's surprising that a lot of the large protocols are the ones that are investing in this aspect of security because they have a high risk profile, right? They have a big target on their back.
Yeah.
They get a lot of attention from bad actors, and therefore they invest a lot in security, more so than like a brand new protocol would, right? That has a lower risk profile. So like, the way we think about it is that, if you and I, Bryce, are launching a protocol today, we have zero TVL, the ROI that we're going to get from like investing in a bunch of security tools is pretty low because there's no money to steal, right?
Yeah.
So, therefore we're going to invest the minimum amount necessary. We're probably going to get an audit and that's probably it, right? But as our TVL grows, let's say we get to 100 million in TVL and we've got, a couple thousand daily active users. Well, now there's meaningful money in there, right? And we have an obligation to protect that. And so we're going to invest more in security than a team with zero TVL would, right? Where, now scale that up even further. If you're Compound or Lido or Maker or, Balancer or whoever, and you have hundreds of millions or billions of dollars in TVL, then you're going to be making even more investments in security, right, because your risk profile is higher and there's more more hackers that are trying to penetrate your system. So
yeah, no, it makes a lot of sense, and it's kind of like building the safe and then also building the reserves in the safe at the same time, and it's like kind of a new way of doing things. But yeah, I mean, you're not really going to want to spend a bunch of money on a really expensive safe before you have money to protect. So it's chicken and the egg thing. But
exactly,
yeah, it's pretty crazy. Did you guys see, just like kind of from a relevancy standpoint, like FTX is kind of the most recent collapse. Were you guys on top of that? Did you guys see like some anomalies where you're like, there's not enough money to get out? What was going on during that whole thing? Or were you guys looking at specific projects that you were working with?
So Forta, I guess, let me answer this and give a little bit more context into sort of how Forta works too. The short answer is that, no, we didn't have a lot of visibility into that, but I'll explain sort of why that is. So the Forta network is like a giant security camera and alarm system, monitoring mostly DeFi activity today.
Okay.
But we're monitoring on-chain activity across the large EVM network. So Ethereum, Polygon, BNB Chain, Arbitrum, Optimism, Phantom, etc. And there are two components to this big security camera and alarm system. We have scan nodes and we have bots. And bots are like little cameras that any developer can install, sort of the same way that a developer would like publish a smart contract to Ethereum. Any developer can also publish a monitoring bot onto the Forta network. And it's effectively free to do today. And then once that little camera gets deployed on the network, it gets randomly assigned to different scan nodes to run it. And so, it's the equivalent of like a bank having a physical camera like pointed at the vault door. Forta is doing that in sort of in a virtual way for DeFi protocols, right? So we're monitoring, monitoring multi-sigs, monitoring oracles, monitoring pause functionality, monitoring liquidity, monitoring other balances that are relevant for that system. And then also monitoring for threats, right? We're also trying to identify threats like in real time. So that's how the Forta network works, and that's what we have. That's what the network has visibility into, right? Only things that are on chain on those 7 EVM networks today. So, with respect to something that happens at a centralized exchange, there would have been sort of money movement on chain, right? If FTX, for example, was like moving customer funds to Alameda, for example, but like that's not that wasn't a DeFi protocol that the network was monitoring. So there probably were some alerts that may have fired on that activity, but no one was sort of paying attention to that or sort of analyzing that in real time.
I can see how a system like this could not only be extremely helpful for a project who has their own smart contract and who's using it as security, but really also for a hedge fund who's looking to make sort of actionable decisions based off of some of these alerts, like liquidity, I hear, right? Okay, so maybe during this whole thing, the liquidity of the FTT token just went out, and so you get an alert. You're like, oh my God, let me pay attention to this position. Do you guys, like as a business model, I mean, I see you guys are invested in by Coinbase Ventures, Andreessen Horowitz, Placeholder, Blockchain Capital, DCG. I mean, these are the who's who of investing. I imagine they're interested in maybe selling some of this data to hedge funds.
Yeah, so hedge funds, I think the value of Forta extends to anyone that has exposure to on-chain liquidity or code of a DeFi project, right? So if you're a retail investor and you have money locked up in a DeFi project, then you have an interest in sort of understanding what the security posture is of that system. If you're a hedge fund and you're actively trading, borrowing, and lending across the DeFi ecosystem, then you have interest in the security posture of these systems. You also want to know in real time if something bad is happening too,
Right.
because you may have an opportunity to get out of that position or close a loan and maybe pull out liquidity if you can. A lot of hedge funds are also venture investors, like in a lot of large DeFi protocols too. And so we found like VCs and funds that have that are just that are backers of these protocols want access to this real time security intel as well, just because they want to help out the team if they can.
Yeah, it's just kind of like in everybody's best interest to have working security. Like if that gets pushed forward and if people invest in that, like that's going to push the entire industry forward.
Yep. So I think in terms of the sort of the value proposition of all these Forta alerts, our biggest kind of target are the DeFi protocols themselves, right? Because we want them to know when something bad is happening and then be able to react as fast as possible to it. Mm-hmm. And so they're the primary audience, but hedge funds are also an audience. A lot of centralized exchanges and custodians also have an interest in this type of intelligence too, because they support a lot of the assets, like these DeFi tokens, right? Whether it's Uniswap or Compound or MKR or whatever. Mm-hmm. So they have an interest in monitoring these protocols as well. And then there are also a lot of like data providers out there, think about. I'm just going to throw out some random company names like Masari and the Tai and others, right? Who are providing a lot of like news and data about this space to investors. I'm a
subscriber to both of those, by the way.
Yeah.
Great
so
services.
I think those are potential avenues for distributing this intelligence as well. So
love it. So if we kind of switch gears, talking about regulation, and I'm curious, like you're a lawyer in the space since 2013, so longer than most people have even heard of crypto, right? So we've seen how it's progressed and where we're at now, and it's now kind of like in a little bit of a gray area. I mean, have we always not been in a gray area? But like, where's it going, and what are you preparing for? Right? You're how are you kind of thinking about where this all plays out in the next couple of years? Are all tokens going to be securities? I don't know. What do you have any hot takes, I should say?
Yeah, I'll do
that game.
So I have a couple thoughts. None of these are particularly relevant to Forta, but my thought on kind of DeFi is that I think that DeFi activity. So if you think about like just the tech stack that exists, right? We have, and I'll try and like explain this simply so everyone can kind of visualize this, but like the Web3 tech stack today, or like the crypto tech stack, is you have a blockchain layer, a base layer at the bottom, right? That can be Ethereum, it can be Bitcoin, and then below that is like all the internet infrastructure, right? Like HTTP and
IP, I guess.
All these sort of core internet protocols, because all crypto and all these other blockchain networks sit on top of the internet infrastructure, right? So that's all there. So you have the base layer, your blockchain, layer one, and then you have your assets, and then you have your DeFi protocols above that, and then you have above that you have like your applications. That can be like your websites, your wallets, et cetera, like the user interfaces that you use to interact with all of this infrastructure. And like right now, like we're directly interacting like through a UI with like a smart contract with a protocol, right? If you're interacting with Compound or Aave, et cetera, right? Like you're using some front end, but you're directly interacting with the Aave contracts. And I don't know that that's always going to be the case.
There's got to be
The
an
user,
intermediary there, maybe.
yeah, the user experience is not great. It's really catered to a kind of crypto power user. And I have this kind of hunch that more DeFi activity, more of the sort of retail transaction flow is going to move towards like centralized platforms, right? Like a Coinbase or a Binance, for example. And those platforms will be connected to the large DeFi protocols like Uniswap and Compound and others. And you'll be interacting with those through those regulated platforms because they want to know who you are, right? And they'll also be able to protect you better, right? They have customer support teams, they have insurance, they have all these things that like you typically expect when you're engaging in a financial transaction that you don't get when you are just using your MetaMask wallet interacting with the DeFi protocol directly, right?
Totally.
So I think that's probably what will happen over time. But to force that to happen, you need regulation to sort of to demand that, right? And until then, I think you're still going to have a lot of individuals directly, interacting with, DeFi protocols through a dApp. And there's probably some small number of people that will always do that. But anyway, so I guess that's one. I don't know if that's a hot take, but just kind of a hunch that
I like to ask that question a lot for people that do have a background in law, just about what they see. And I haven't heard that one before, but it's really fascinating. It makes sense. It's like, these maybe exchanges will offer two kinds of orders. You could make an order through the centralized order book and paste a limit order, or you could click, I want to trade through the AMM or through Uniswap or something. And then Coinbase could route that order and then, be providing liquidity on there. You could have other market makers, other exchanges, all using that one kind of centralized liquidity pool to make transactions against. And that's probably the way it's going to go. It's very prescient of you.
Yeah. So that's one. And then the other is my other hot take is I think a lot of people probably agree with this is like around CBDCs. I don't think I don't think any government should like build their own digital currency. Most money that's in circulation is already digital today. I don't know what the percentages today, but like something like 98% of US dollars is already digital, right? There's no dollar or coin in circulation, right? That represents it, right?
Number on a bank account.
Yeah, it's a number on a bank account, and it's that money's created by the Fed when banks draw down on their Fed accounts. They borrow from the government, and so that's how that's how most dollars get created and put into circulation. And so we already have digital. Most money is already digital, so that's one thing. And then two is that if you think about sort of why we already have stable coins, like USDC is a great example, right? Like it's already it's an implementation of the dollar on a blockchain, right? And the reason Coinbase and Circle did that is because we didn't have a stable store of value on a blockchain, right? And we needed one because that's a sort of a core component of like any financial system. You need a stable store of value. So in the absence of like the US government issuing a dollar on Ethereum, private tech companies said, well, we'll implement the dollar on a blockchain, which is a really, it's sort of a kind of a table stakes thing, right? And they're really good at implementing that, but they're not creating money, right? They're just taking they're taking a dollar from someone's bank account, and then they're locking it up, and then they're issuing a stable coin against it, right? So I think that's a great model, and I think it's doing. And I think the last statistic I saw too was that something like 99 point something percentage of stable coins in existence are pegged to the dollar. So if I'm the U.S. government, I'm looking at that and thinking, wow. Circle and Coinbase and all these crypto companies are actually helping promote the dollar globally better than we could. Right?
That's a great point.
It's helping sort of entrench the dollar as like the reserve currency of the world, and they don't have to do anything, right? Like all these private companies are doing it for them. So I see that as a huge a huge tailwind for like the dollar being adopted in more places, or being used in more places. And I also just don't think that the government's ever going to be as good as a tech company is at like implementing something on a blockchain. Like, let tech companies worry about implementation. Government should just worry about like monetary supply and policy, right? So if they can sort of work together on that and let government do policy and let tech do the tech implementation, and they can partner up, like that's basically what's happening now. It's just like they're not calling it a partnership. It's just kind of happened that way. It's evolved that way. But that seems to be, at least to me, that's how I think it should work or continue to work. So I hope that that's what happens. I hope we just use dollar-backed stablecoins, and like the U.S. government doesn't try and gum things up by issuing like an official U.S. dollar stablecoin, right?
Yeah,
so,
kind of letting the free market work itself out and seeing.
Yeah.
I mean, that to me looks like the most logical path forward as well. And it's a great point. So before we let you go, Andrew, I'm curious, just for our listeners at home, what's one other crypto company or crypto person or protocol, just one other thing that you think listeners should probably research, or that has impressed you, that's cool, cutting edge?
Ooh, great.
Kind of an open-ended, nice, soft question to close things out.
Yep, great question. I just got off. I was talking with someone from a project called Eigenlayer earlier today.
I've never heard of this one. How do you spell that?
Eigenlayer. Eigenlayer. And they're fairly new, but they are helping projects sort of bootstrap economic security by leverage. You can leverage ETH validators and ETH staking to sort of secure a new network if you're just launching and you don't have, like, your token doesn't have a lot of value and things like that. So
it's like merge mining with Bitcoin.
Yeah,
kinda.
Exactly. It's so take that concept and apply it to like securing a network with like the ETH staking that happens on Ethereum.
Totally cool.
And letting other companies sort of piggyback off of that to secure their own network. So really cool. They're really early in development, but I think it's fascinating, and I think it solves a lot of problems for new projects. So that might be one to keep an eye on.
Yeah, no, I love it. And I love asking this question, because I always get to hear from the smartest people in the industry, what's on the bleeding edge, what are they excited about? And then that gets everybody here at Crypto 101 excited. So I'm going to go do my research on Eigenlayer. I'm going to keep tabs on Forta Network and your journey, Andrew. So where can people follow you? Where can people keep tabs as well on Forta?
Yeah. So we post a lot on Twitter at Forta Network. So you can follow our Twitter handle there. And our website is forta.org. So you can learn more about us there. Yep.
Okay, well, awesome. Appreciate your time today. Thanks for coming on, spending 40 minutes with us. And we hope to have you back on again one of these days with some more maybe breaking news about how Forta saved a hack from happening or whatever. You just let us know when something big happens, and we'll be here to highlight it.
I look forward to it. Thanks for the time, Bryce.
Take care.